Maureen. Okay. Well, then I'll just go through introduction. So I'm Tonya. Oh, here comes Maureen. So I'm Tonya. I'm with New American Funding, and hello, Maureen. Can you hear us? Oh, she can hear us. So I'm with New American Funding. I am a local mortgage lender. I have been in the business for, sorry, I was doing two different things. I actually do know what I do. Anyway, so I've been in the business for 11 years. I help home buyers and sellers with residential mortgages only. I don't do anything with commercial lending, only residential. And so I have a lot of experience in new construction, VA loans, do quite a bit of rural financing. Conventional is a big staple right now. Hello, Maureen. Can you hear me?
Hello?
Can you hear me? I can hear you.
I can hear you. I couldn't hear you on my laptop. I have to switch to my phone. Sorry.
Oh, well, good. Hi.
Hi.
Jesslyn is with us as well. So
Okay.
we were just going to run through some of the basics. I was just introducing myself. And so really, I am a lender. So what we do is we process, underwrite, and also fund the loan. We service the loan. So that means that whenever the person gets their mortgage statement in the mail or an email or auto pay, it's going to New American Funding. So we manage the whole process. We are not a bank. We do not have brick and mortar here in regard to a banking drive-through teller, deposit your checks kind of a scenario. And we are not a broker. The difference between us and a broker is we do manage our loans and keep that processing and underwriting in-house. I am local, and it is very common that whenever you're working with your home buyers or sellers, that they will be looking for their next home sometimes on the evenings and weekends because they're working during the day. And so I am going to be available for you. Best contact for me is always my cell phone or email. But as Maureen knows, when you're out looking in the evenings and weekends, it's nice to just be able to send a text and say, hey, this person has a question, or I have a question, or hey, we need a pre-approval. So I'm getting qualified for a home loan. The process itself, the application process is very simple. The person can either meet me in person, talk to me over the phone, or do things electronically. The application process basically is name, date of birth, social, those basic pieces. Same thing as getting a car loan or applying for a credit card. The next step is actually providing the financials. And so the financials are going to consist of pay stubs, bank statements, taxes. If there has been any life events, such as a divorce, foreclosure, bankruptcy, things like that, then there would be additional documentation that we would need to make sure that we can qualify for the next loan. So those things are supplied by the person looking to get qualified. I go through all of those, and I do not do a pre-qualification, I do a pre-approval. And so the difference between a qualification and an approval, hi, Jason's phone. Oh, that's Maureen. Okay. I thought we had somebody else coming on. So the difference between the qualification and the pre-approval is with a qualification, that typically is just with the credit score pull. I would not recommend that you to put anybody in your car to go look at homes with a pre-qualification. You want to make sure that they're pre-approved. Pre-approval is they have completed the application, we have reviewed credit, and they have provided all their income and asset documents for me to review and ensure that they can get the financing. From that point, then that is whenever I would take them out to start looking at homes, because they're going to be 100% ready to go to put an offer in on a home. Once the offer is accepted, from the date the offer is accepted to the date of closing, you should estimate the closing timeline to be about 30 days. Other things could change that. Maybe it's not an owner occupied home, or the owner has already moved on to their next property, so the home is vacant and they would like to close as soon as possible. We can accommodate a sooner closing. Maybe the owner is building a home, or they're not going to be relocating for a couple of months, and so they need some extra time. That obviously just comes down to your negotiation pieces. So But anyways, the closing window is typically about 30 days. Inside of that, once you have an offer accepted, you are doing a lot of work as the real estate agent. You are connecting a lot of the pieces together. Some of those pieces are going to be, once we have the offer accepted, you're doing the inspection. If that person doesn't already know an inspector, then maybe you're lining them up with somebody, an inspector. And then also we're identifying who the title company will be. There are a lot of really great title companies in the Twin Cities here that many of us use. And so if you're looking for a recommendation to a couple, let me know and I can certainly help you out with that. But then the title company, what we do is we coordinate the closing with them. We being the agent, I may be involved in that as well, and identifying the closing date per the contract and scheduling that time. The title company coordinates between the seller and the buyer to get that scheduled up. And with COVID, when it first started, they weren't even having us at closing, and now some title companies are allowing us to be at closing. So that was one of the big things I missed over these last few months, is not being at closing. So it's the grand finale. It's fun. Anyway, so then that's the title piece. And then from there, as a lender, we're ordering the title. We are having the title company get everything in order to transfer that title into the new owner's name, with that lender being on the lien, so New American Funding. We also work a lot with the homeowner's insurance company to make sure that the insurance binder is attached to that home and mortgage, and coordinate, or I already talked about the closing, but coordinating the closing disclosure so that the home buyer can obtain their cashier's check or their wire transfer for the day of closing. So in that mix, you'll also be coordinating their final walkthrough. So maybe it's the day before the day of closing. You'll be doing the final walkthrough with them, and they'll also be swinging by the bank to obtain their cashier's check unless they've already wired funds. So lots of communication happens during the process. It is super, super important for the lender to do that pre-approval up front so that during that process, we don't have any changes in eligibility. I have seen things happen. It can happen. We always advise people, let's not change jobs. Let's not move money around, different things like that. Don't buy a car, don't buy your furniture yet. So there's a lot of forewarning that we give people to make sure that they don't impact their closing day and being able to purchase that home. Unfortunately, it has happened. I have seen some people make some not great decisions, and it may have either canceled closing, rescheduled closing, or delayed. So anyway, so that's that piece. The application, again, very simple. It typically takes about 15 to 20 minutes for someone to complete that, and then I can turn that around the same day. So do you have any questions about the application piece before I move on to a couple of the loan products?
No, I'm good.
I'm moving on. So as far as the loan products themselves go, what New American Funding offers versus what the majority of other lenders offer are going to be very much the same or similar. We do have some additional products that we're not seeing in the local market, so that does set us apart. But when it comes to a conventional product, that's going to be pretty standard. So conventional is going to be very standard. With conventional, you can do as low as 3% down. You do not have to put 20% down. If you do put less than 20% down on a loan, you're going to have mortgage insurance, and there's many different types of mortgage insurance. And those are things that I educate the client on as far as what those options are and how they impact them on a monthly basis, and also long-term in the loan. So I very much enjoy digging into those numbers and showing where some of those savings can be, and letting that client choose how they want their financing set up. So there's conventional. There's also government financing, and government financing that's going to be your FHA loans. FHA used to be the staple for first-time home buyers. And the reason I say that is that FHA has a lower credit score requirement, lower down payment requirement, or if someone had a life event that happened, meaning let's say a bankruptcy or foreclosure or short sale, FHA is the loan that they can get into first before anything else. And so that's a government-based loan. There are some different things that go along with an FHA that can make it very good for a client or not the best option for a client. And so it is really my job to identify those things and then share that with them and educate them on what those differences are and allow them to make their choice for what they want. Most people, if they can qualify for an FHA or conventional, they will generally pick the conventional loan just because the mortgage insurance and different things that go along with that may be better. The other thing is that when you go out as an agent into the market to put an offer in, you will generally find that a seller is going to be more influenced over a conventional buyer versus an FHA buyer for two reasons that I've seen. One, primary is with FHA, we may have the thought that they're not as strong financially to make that purchase, and so they might be higher risk for it to fall through. The other misconception is, I shouldn't have used that word. The other fact is with FHA, the appraisal is different on an FHA loan than a conventional loan. So on an FHA loan, they're really looking for livability, safety, and things like that of the property, meaning that we don't want to have mold, broken windows, missing hand railings. They need to be able to get into the attic. There's different things with an FHA loan that are required, whereas on a conventional loan, they may not be required. They could get problems could get called out by an appraiser. Let's say there's excessive mold in a basement. That's probably going to get called out on a conventional loan appraisal as well. But it's FHA has specific standards for any of these things. One of the other big ones is peeling paint. So anyway, so FHA is a bit different. So on the government level, you've got the FHA loans. Then you also have the VA loans, and that's also another government loan. VA are for military, and they are probably my favorite loan simply because of the terms. No mortgage insurance. The interest rate is lower than all of the other loans. And it has to be primary, but it doesn't have to be just a regular conforming. It could actually be a jumbo loan too. So if somebody was purchasing, let's say, a $900,000 home, they could use their VA benefits. And that's a huge savings for that vet. So I really love that loan. Also, if that vet has any disability, they do not have to pay a VA funding fee, which is also a nice benefit for them. So with the appraisals, because it is a government loan, same thing. We don't want to see peeling paint, mold, broken windows. Health and safety hazards just aren't going to be okay. We want them to be able to move in. It doesn't have to have appliances. That's not a requirement. And so that's the VA. And then the other government loan is going to be rural, USDA. USDA, I always think of cows and big steaks, right? It's not. So rural is, rural is going to take you into, have you ever heard of Malacca? It's going to take you outside of the cities for sure. That census kind of moves out every whenever they review that, as far as the distance as to what homes qualify for rural or what homes are inside of the rural area versus outside of the rural area. So you get over into like Victoria and you might see some boundary lines where some are in Victoria and some are outside of. But anyway, so those are 100% financing. Rural homes do not have mortgage insurance. There is a funding fee, gets rolled into the loan amount, but there's not actually monthly mortgage insurance. And the buyer gets to do zero down payment. So that's pretty awesome. With that, there are also household income limits that go along with that as well, that they need to be able to stay within. If a person has enough money to do a down payment, then the lender is probably going to say, you're going to have to go ahead and put in a down payment versus doing 100% financing if they have the means to do so. That loan's really established there for folks that don't have the means for the down payment. So that's the other government loan. And then we also have the physician loan. Oh, the physician loans are awesome. If you have an opportunity to work with a physician, maybe they're coming straight out of school or maybe even a year out of school and they want to purchase, they went from no money to having lots of money, right? Really good income, but they also may have quite a bit of student loan debt because that's pretty typical. Some are blessed without having that student loan debt, but many do. And so that income versus that student loan debt may or may not balance out. But when they come out of school and they have that first contract, they're typically making very good money, and they want to purchase a home that, let's just say it's in that $500,000 range. But what may happen is with those student loans, it may offset that to where they wouldn't traditionally be able to qualify for a conventional loan, let's say. What the physician loan does is a couple things. One, they can put a minimum of 5% down, even if they are in that non-conforming, more in that jumbo range. They can do 5% down. They also will not have monthly mortgage insurance. And so the mortgage insurance, the student loans, we don't have to count the student loan debt against them. We actually don't have to count that against that monthly the monthly liability, which is really great, because what happens with those the doctor incomes is that they start at a certain level, and then there's usually like a quarterly bonus or something like that, and then every year there is substantial growth over the first, the contract may be written for the first 3 years or something. But anyway, so the doctor loans are great, 5% down, no mortgage insurance monthly, and we don't have to use that student loan debt. So that just puts them into a very nice qualification range. Other loans are new construction. So if we find somebody has found a lot and they found themselves a builder and the builder wants them to finance their build, we can help with that. We can help the builder and the new homeowner on that financing piece, and then do that end loan into that. Let's say maybe it's a conventional loan or a government loan. So those are some different styles of the loans that we do have to offer. So we do have the minimum down payments, we have zero down payment, also down payment assistance. There's a lot of really, really great down payment assistance programs in our state. And one of the most popular ones is called Minnesota Housing Finance Agency, MHFA. So many acronyms in this business. But MHFA is Minnesota Housing Finance Agency, and they offer down payment assistance not just for a first-time home buyer, but also even like a move-up buyer could get down payment assistance. So I helped a lady, actually one of the agents in your Minnetonka office had helped a gal with her first home. She used down payment assistance the first time, and their family had grown. They needed more space. And whenever she was selling her house, she was actually going to have to bring a little bit of money in order to sell that at the time, and needed to get down payment assistance again to purchase her next one. And so she was able to use the first time home buyer down payment assistance on round one. And then on round two, she was able to use what they call step up. And that is down payment assistance for someone that has owned in the last 3 years that just needs a little bit of help to get into that home. So that's a very, very common down payment assistance program in Minnesota. There are a lot of other ones. Eden Prairie has a great one. Dakota County has a really good assistance program that covers the entire county. Minneapolis, they have a new construction one that is phenomenal for buyers. Builders are, well, it's part of the government bonds and things. But anyway, you can do a new construction in Minneapolis and get this great assistance program. And so anyway, so there's a lot of different programs out there. Some come and go frequently. Some might stay around for a little bit. Basically, the cities or counties are applying for these monies. You have to meet certain needs in order to get that. The money either all gets used or it doesn't. But then if it doesn't get used, there's a timeline to it. And so the government pulls that money back, and the city or county have to reapply for that again. And then that program may be replenished with more funds that are available. So those are some fun things to also be able to look at for folks. Let's see, what else? So really when I go through with a client, if it's a seller or a buyer, I start with that application first, and then I hear about their story. I want to know what it is that they're wanting to do, needing to do, understanding their financial situation, and hearing and listening to what they're telling me, because they might be sharing information with me that may lead me down another path of loan options for them. So kind of where I go there is our sellers. So I love working with our sellers because especially right now, they have equity. They got so much equity. It's so great. And so it's very common that sellers will take their equity and they'll apply it to their new home. However, it could be a huge money saver for them to not only apply most of that equity or some of that equity, and then apply some of that other money elsewhere, maybe to eliminate some other debts that they've acquired over the time, over the years, or if they did some student loans for kids and stuff and want to pay some of those things off. So the selling of a home for someone doesn't just free them into getting into maybe more square footage or less, depending on which direction they're going, but it also could give them quite a bit of freedom financially in other areas as well. I've even had some people where they're like, let's go ahead and we're going to invest in the purchase of our new home, but we're also going to invest that money in other areas as well. Not debt consolidation, but in other areas of money, growing money. So anyway, so those are some very basic things to know about the finance side of it. Again, I do just the mortgage side. I help folks get approved, get them eligible, and get them through to closing. We also, you may have, or some of you on here know Mary. Mary is also on my team. She does not do anything with mortgages. She knows how to spell it, but she does not do mortgages. What Mary does is she does marketing. She is a marketing queen. So if you ever have questions on your marketing, if you want to drill into maybe some specialized marketing for a specific property, or a niche that you're getting into or want to focus on, those are really good opportunities for yourself, Mary, and I to sit down and go through and do some brainstorming and planning on different marketing tactics that you can do, and we can help support that as well. So let's see, what else? Do you guys have any questions?
I do.
Okay, go for it, Maureen. What do you got?
Okay, so I didn't know if you could explain to me what an appraisal clause is that would protect sellers. When you hear real estate agents say, we're building in appraisal clauses to protect our sellers in this market because frequently houses are going over asking price. So we want to protect our sellers in this market and we're having appraisal clauses put in. How does that work?
Okay, so so that is a very kind of general. So let's make up a scenario. Okay. So let's say that the house is, and let me know if I'm going down the right path. So the house is listed at 275. We offer 300, so that's considerably more than what the house's value is, right? As far as what it's listed at. And so the seller's saying, wait a minute, if you're going to offer me 25 grand more, then I want an appraisal clause in there to cover that difference. So if the appraisal doesn't come in at 300, you, Mr. and Mrs. Buyer, are going to cover that difference.
Right.
Is that what you're talking about?
Yes. So that would come on. So the agent who is representing the buyer would have to make sure that they had that with their offer. Is that right?
Yeah. So like for that scenario where it's the 275 versus the offers at 300,
Right.
as a lender, so from the lender's view, what we are going to do is if that appraisal comes in at the purchase contract of 300, we're good. Okay. Everybody's happy, right?
Right.
If it comes in at 305, everybody's still happy. Purchase contract's 300, we close with the purchase price of 300. But if that appraisal were to come in at 295, now we have a $5,000 difference. So what I'm going to do as the lender is I'm still going to use well, first, if that clause is there, that's because we have agreed, we being the agent, buyer, sellers, we have agreed that the buyer will cover that spread of that $5,000. So are you following me?
Yes.
Okay. So as a lender, what I'm going to do is I'm going to say, okay, we're still buying the home for 300. However, the value is only at 295. So on my loan, then let's say that the client is putting 10% down. Well, now instead of 10% down on 300, they're doing 10% down on 295. And then they're also bringing in that difference on closing, and it's on the closing disclosure on the CD. They're bringing in that difference of that 5,000. So they're bringing their 10% down plus the 5,000, and if they're paying their own closing costs. So that's how that's set up. Now, I did recently have a client that they said, hey, if this happens to us, can we still qualify if we put less money down so that we can take that other 5% to cover that spread? And of course, yes, they could still qualify, so it was fine that way. But then they, instead of doing their 10% down, we're doing 5% down if that happened. The appraisal actually came in just fine. But does that answer that question?
Yes. Yeah. And I just was curious if you're seeing in this market, if you're seeing a lot of listing agents require that in order to protect their sellers.
I am seeing that quite a bit because the inventory level is so low that we've got 15 to 25 people putting an offer in on a property at a time. I mean, it's just crazy. And so what is happening is that even if that home is priced right in the market and we can see that the comps support it, once we start to elevate that dollar amount above and beyond what that value is, because we have two things. Obviously, someone's not going to pay for something that the value isn't there for them, right? So the value is there for someone. At the same time, it also needs to be within market value. So we have supply and demand, so we can use that case of, well, we have a market value, right? Market value is there, supply and demand. At the same time, we don't want, there's going to be some control in the market, because if everything in the neighborhood has sold at 265, and now you're listing it at 275 to take advantage of this market, and it sells at 300, that's a huge spread in the market. That's a ginormous percent of increase in value. So, so there are issues happening with appraisals. And so when we are really close on those things, I always advise folks, and you'll hear agents in the office, in your office, talk about that. Like, what are some strategies that you do? And so some of those strategies are making sure that there's information left behind at the property to show the comps of where that supporting value comes from. Maybe even giving the list of updates or upgrades to the property that have been done to make sure that the appraiser sees those things. They see them, but it's just something extra to do, extra homework to do, to say, hey, we've done our due diligence and this is how we see that value is here. So I don't know if that helps at all. So
yes, thank you.
Cool. Yeah, you bet. You bet. That was a really good one, because gosh, that's happening a lot. Some other things that I'm seeing in the market too, Jesslyn, if you guys see that, oh, Hailey is on here. So Jesslyn just joined the Market Center. And so she's newer to seeing what's happening in the market. And Jesslyn, it's crazy. So if you could get some listings, that would be super fantastic. You will sell them right away. And we just need more inventory. But some things we're seeing is offers above and beyond. We are seeing people waive their inspection contingencies. They may still have an inspector go out, but they're waiving those inspection contingencies, which can be scary and on some of their properties. But yeah, so some different things that we're seeing. I'm just scrolling through here. This, can you guys still see my screen?
Yes.
Cool. Okay, so I am just gonna buzz through a couple things because I thought I had a couple things in here that I want to show you. This is a home buyer guide. This is something that I will give to people when I meet with them in person. It's super helpful. You do, through your command system, have some really great home buyer tools in there as well. This one is very specific to the lender. In your command, that mortgage stuff that you're going to see in there is going to be primarily with Keller Mortgage. And so it has just some basic information where this is more of a deep dive. Some of our home buyers and sellers love this kind of information. So if this is something that you'd like, I can certainly have it co-branded with you on there. We do a ton of co-branding. And so if you're ever looking for material, like, I don't know, I just need to post some stuff. Can you give me some material? Just shoot us a message and we'll get you some goodies. But this talks about just the homeowner's insurance and some things that we're looking for there. If you are not partnered up with a homeowner's insurance agent at this point, I highly recommend that you do that. Maybe reach out to whom you work with for your own personal insurance. Some of the bigger companies, big brands that are franchises, have sometimes a harder time doing any kind of branding with you or lead sourcing and things. Your brokers and stuff, they typically have less restriction with that. The co-branding piece of it. But the homeowners insurance agents are awesome because they know when people are renting and about when those leases are up, and can potentially, help you on that side too. The other thing is if you ever want to do any kind of home buyer seminars, if you want to do a recorded one or a live, make it some kind of a premiere where you invite people in, and make it an event online like we're doing now, or an actual live in person. Homeowners insurance agents are super great to have at those because they will tell some really scary stories and show some icky pictures of flooded out basements and nasty, burnt up garages and things that you don't want to see. It's like, oh yeah, I guess I do need to have good homeowners insurance, don't I? So let's see.
Can I ask a question, Tonya?
Yes.
Are we supposed to be setting that up for our clients?
No. So
Okay.
you do not need to. I highly recommend, if you don't already have a like a packet of information during your different stages of the process and different checkpoints, I recommend doing that. The homeowner's insurance, so what will happen is that whenever I'm going through the process with them, I have to have the homeowner's insurance contact. If they have somebody, great, then I want them to get pricing from them. If they don't have someone, maybe they're just using a Progressive or something, then I'll say, here's some, here's contacts if you want them, unless you have somebody. I have to have that homeowner's insurance up front, but I do think that those are things that I talk to them about. But I do think that as far as like I don't know, do I want to call it a preferred vendor list? Is that even legal to say that now? I don't know. But like having, if you have an inspector, a photographer, insurance, the plumber, electrician, these things, those are helpful things for people to be given, because everybody knows somebody, but whenever there's that contact that you're sharing, it just solidifies that so much more. At the same time, you also need to make sure that that person's going to be responsive. So if you say, hey, plumber guy, I'm going to be, I have clients that are going to need this stuff, but it's real estate. So we're going to need it like within a couple hours or 12. And make sure that they're going to be able to provide service to you and your clients. So that's going to be important as well. Locksmith, that's another good one, because whenever someone moves into the house, they don't have to replace all of the actual hardware. They can just pop out the lock and put and rekey everything, right? And that's much cheaper for them as well. So our first-time home buyers like that a lot because it's quite a saving. So having that referral group, that's really helpful. CPAs, it's good to have CPAs on there for people too. Once they get into home ownership, that typically is one of those turning points where they start to use a tax person. So yeah, hopefully that helps. Another thing, Maureen, that goes along with that preferred vendor list style, another thing would be closer to closing. I see it a lot where people are like, wait, who am I supposed to contact for garbage and water and, changing my mailing address and all these things. So sending something out a week and a half, maybe before closing, 2 weeks before closing, with just a little hit list of things to prepare, that's actually would be really nice for our clients to have. That's not something that I send out to them. So that would be nice. A moving checklist, like if you wanted to do, 4 weeks before moving, 3 weeks before moving, 2 weeks before moving. I actually do have a checklist for that. But that's also another thing that's really nice to have, because there's some certain things, maybe with schools, busing or something. I mean, us parents shouldn't forget those things, but honestly, I've seen some people forget. So but there's just good tips for that too. So any of that kind of information that you can give to your clients to provide that a la carte service is super, super nice. Underwriting a home loan, you guys. Underwriting, our underwriters are local. Love my underwriters. Even though they're bossy and they tell me what I have to get from the client, sometimes I give a little bit of pushback on some things. But underwriting is amazing. They will pick up the phone and call me. They'll answer their phones when I call them with questions. And so it's just a really great to have people communicate that way. So receiving an approval on a loan, the very first thing here, being denied, well, that sucks. Nobody wants to be denied for a loan. So, you never know what could cause that, change of jobs, loss of life. There's maybe been some documents that were not real. I've actually had that happen before, where someone disclosed their taxes to me and it wasn't actually their taxes. So there's some stuff that happens. Typically the fraud department that catches all of those things and keeps the loan officer out of it until they give us that big red X. And it's like, wait a minute, what happened? So unfortunately, that kind of stuff still happens. But anyway, we get approved with no further conditions or questions. If the file is suspended, that could just be because there's been a lot of questions that still need to be answered or clarified. That suspended isn't too super scary, but it can happen. And then just approved with conditions. That's basic stuff. That's usually what happens on all the files, is an approved with conditions. Approved with conditions could mean, hey, we need proof that your earnest money deposit cleared your account, or maybe they're getting a gift for transferring money from, money market account or something. So we just need to see the monies went over, or maybe we need a current pay stub or something. So basic stuff. Okay, we New American Funding, when we send out the closing disclosure, we also send out the closing packet to the title company. We send the closing packet to the title company, and we also wire the funds to closing. So sometimes I joke around and say, yeah, there's going to be a briefcase of cash sitting at closing for you. There's not really a briefcase of cash, but it's kind of fun to say that. And so if someone gives me any kind of, flack on having to provide a new pay stub, I'm like, well, I guess you could either give me the pay stub and get the briefcase of cash, or not get the briefcase of cash and close on your house. So anyway, all of our documents have to be within the last 30 days, which, by the way, that's actually a good point, so that if you ever hear people say like, oh my gosh, I provided a bank statement and then I had to provide another bank statement. Documentation right now with COVID does have to be within the last 30 days. So if we are outside of that 30-day window, then we will ask for an additional bank statement, pay stubs, something like that if that happens. Let's see, they sign their documents with title. That typically takes about an hour. I know a couple of you have already had some closings with sellers and with buyers. And so you've been at those closings and see how those operate. Our, again, local title in this area, we've got some really fabulous people that do our signings. We do fund the loan. I talked about that, get them moved into their home. Now, another thing that we do here at New American Funding is we also send them just a welcome packet. The welcome packet has a lot of different information in it. And so there's actually, I think it's like 3 or 4 different points where they get communication, where they can use their mobile app to do their payment, set up their online, or just do checkpoints on their mobile app. They can sign up for auto pay if they want, or they can have their payments, they can mail them in if they still write checks. I say still write checks because anytime I have to write a check, I feel like it takes me a half hour to write it out because I don't write checks anymore. But it's kind of like faxing. We have a disclosure that says, hey, fax it back. I'm like, who the heck has a fax machine these days? But some people still do. They actually just scan them or take a picture from their phone and send it to me. So anyway, so however people use their technology is how we work with them. But on the statement, some fun things that we do is on the actual mortgage statement, as the agent, you are also co-branded on the mortgage statement every single month with me. I take that back. I'm on there every month. You're on there every quarter. There's a call to action. So if there's certain things that are happening in the marketplace, like great equity, things like that, if they have questions about refinancing or anything like that, there's different call to actions that get posted out there. But we really work hard to make sure that we're keeping you in front of your client as well. So that's on the mortgage statement, if it's paper or electronic. We also do a 7-year campaign that also has you co-branded, and that campaign could be, again, market things that are happening, or it could be happy birthday, happy anniversary, happy home anniversary. So we send out different email, mailers, and also greeting cards to the client for 7 years after closing. So that's pretty great. And that's all free to you. You don't even have to pay for that. So that's pretty awesome. For those of you that we have done business, you'll also get during a transaction, if we notice that there's any changes on your, it'll be your MLS, your license number, your company name, photo updates, things like that. We'll do a checkpoint with you to make sure in case there's been any changes whatsoever, even if it's like a broker change or something, so that we make sure that your information remains current. Let's just say that Maureen moves to Utah next month. And so she's at a different Keller Williams. Well, we're going to make sure that her current standing in Utah is updated on our systems so that her clients that she worked with us on have her updated information. So that's nice too. So anyway, so I think that was a lot of general information. Actually, it took longer than I thought I was going to take on that. But do you guys have any other questions that we can go through? So quiet. So I'm going to take that as a no. And I'm so glad my furnace guy didn't show up while we were sitting here, because everybody would have went crazy and the dog would have barked and it would have been obnoxious at the sample house. But so I think if you think of anything, if you have any questions, if you'd like to revisit about any specific topic that I talked about today, I always welcome a call. And my number, you have my cell phone, actually, and it's on the roster, 763-213-2195. Call me, text me, email me, whatever. And thank you for joining in today.
Thank you for having us.
Thank you.
Tonya, can we get a copy of what you taught today? And then could I get a copy at Lead Extreme of any of the buyer packet stuff that you've got that you were talking about?
Yeah, absolutely. So what I'll do is I will send over just that. I kind of went very basic over that buyer packet there that was in the back. I'll send that to the three of you so that you have it. And then Jesslyn, what's your email address? Is it Jesslyn@KW?
Yep.
Okay, I got it. All right.
Perfect.
So I'll send the three of you this buyer packet so that you have it. And also note that this can be co-branded with you. So if you want it to be branded with you, just let me know. And we can certainly do that. Okay.
Wonderful. Thank you.
Cool. Thanks.
Well,
Thanks,
have
Mike.
a wonderful afternoon. We'll see you guys soon.
You too. Talk to you later.
See ya.
Bye-bye.
See you later. I'll get an appointment if you want one.
I am, thank you.
Why does it matter? Honestly. always so look at it. Dear, oh dear. Why do you care? Always doing anything shady. Worst way. Yeah, of course. Okay, sorry. I gotta get in here too. January 2nd. Sign it. You're done. That's it. It's so. It doesn't